What's up everyone, it's Karthik with Moneyvest. In this video, I'm going to go over my entire 2024 options portfolio performance, updates, every single metric, every single data point that you want to see and really evaluate my trading performance. And I'm also going to be putting out a free video. So this right here is going to be clipped and there's going to be a free video also in this video going over my 44-point checklist PDF, which you can also download, by the way, for free. This is my gift to you as a happy new year in 2025. And we're just getting started with our 2025 options portfolio as well. So if you want to join, if you want to get access to all of that, link's going to be down below. Like I said, this entire video is going to be available for free. You don't have to do anything. You just have to sign up on Patreon. It's going to be completely available for you for free. And this is almost an 8-minute video, which you can watch with my PDF also available for you to download. So this is my full 44-point options trading checklist. You just click on this link and this is a PDF that you can download, and we'll go over all the different scenarios and rules and considerations that I like to follow when I'm trading options. And the reason why I'm doing this is because I've been getting a lot of questions on YouTube on how to trade options, what are some of the things to consider, what are some of the risks to take account for. So this pretty much covers almost everything. Obviously, it's not the holy grail or it's not something like a hidden secret. It is going to get updated over time, but I think it's a very, very good starting point, and it covers a lot of the bases when you are first getting started with trading options. So again, links can be down below for free. You can download this and also watch this video, which goes over this entire PDF document. So this right here was my 2024 performance. This is the summary of the performance in terms of the win percentage as well as the average monthly or weekly gain. And this right here is or was the portfolio summary. I've already started 2025, so I've already got the 2025 numbers over here. So if you come over to the weekly P&L, this was 2024 broken down by every single week, and this is 2025. So we are now in week number 2. It's going to get over here today. Today's Friday. And so I will update these numbers and again, update everybody on our Patreon over the weekend. So every single week, I send out updates in our Patreon. I post videos going over the options portfolio, showing everyone the performance, keeping it very, very real and transparent. All the trades that I'm taking, all the performance, whether it's, a gain or a loss, percentage higher, lower against the S&P 500. So showing you everything so you have a clear idea and an understanding of what I'm doing and how my performance is. Like, I'm putting myself in a very vulnerable spot, but that's how you grow. You got to get out of your comfort zone to grow, to get feedback, to reevaluate your strategy. And I'm not saying it's going to be easy. I'm not saying it's going to be a smooth ride, because it takes a lot of effort. It takes a lot of understanding of over 44 things that you have to consider at any time if you are trading the wheel strategy and if you're trading options. So it's a blessing, right? If you're doing well, if you're doing better than the market, take it as a blessing. Of course, there's skill involved, but at the same time, it is also a market's blessing. The last couple of years have been very strong. So 2023, you'll notice the options portfolio was up 26% against the S&P 500's 24%. And 2024, the options portfolio this past year, which we just closed out, was up over 32%, with the S&P 500 just shy of 24%. So this year, or this past year, the alpha was significantly more than the year prior. So over 8% above and beyond in terms of that return against the S&P 500. And this is a risk-adjusted alpha, which basically takes into account both the beta as well as the risk-free rate. The risk-free rate we use is the 10-year treasury bond, because that would be the next best alternative of us investing into the market. And if the 10-year treasury, which is the risk-free rate, giving us a 4.5% rate, then are we able to achieve a higher rate of return with an equivalent amount of volatility, or maybe a slightly higher volatility, but that volatility increase should be less than the return that we're generating over and above the 10-year treasuries. It's a little bit more complicated, but there is a formula for calculating the equity risk premium. And again, there's beta involved, the market risk premium, so to speak, and then, of course, multiplying the differential, so on and so forth. But then if this number is positive, you're getting a superior investing performance. If this number is negative, then that means your performance is not as great as what the S&P 500 is giving us on a risk adjusted basis. This is on a risk adjusted basis. I mean, I can. So for example, the beta for this year has not been calculated yet. It is 0.00 because we've only had 1 week in 2025. As soon as this number gets calculated, which is taking into account this 2025 weekly percentages, so you can see the beta over here. I've got a column for beta, which calculates my portfolio's volatility compared to the S&P 500's volatility. And so this will get calculated, and as soon as it does, the beta will get updated. But if you take a look, this number is positive. That means there is superior risk-adjusted performance against the S&P 500. So now coming over to 2024 performance very quickly. These were all the weeks, about almost 20 weeks since we've been tracking this on our Patreon. I've been sharing the updates on Patreon. The weekly win percentage was 68%. So if you just kind of round this, it's 68%. So in a given week, if I'm selling options, and this strategy consists mostly on selling options, I'm positive 68% of the times. That is 19 weeks, so 13 weeks were positive, 6 weeks I was actually down. The weekly average percentage gain was around 0.54%. This is simply taking into account the entire average of all the weeks. So all the weeks averaged out 0.54, which comes out to a monthly average of about 2.22%. And this is actually well within my target. And you'll kind of see, it's actually above my target. So if you watch this video, you know what, I'm just going to play this a little bit. You'll see, so 1 second. So if I come back a little bit towards the beginning, again, you can pretty much see right there. I've put down my objective, which is annual returns of somewhere between 16 and 20%. So that's my target. That's what I want to achieve when I'm selling options, is a 16 to 20%. And I'm going to be very, very, very realistic with you on this channel, right? Because that's the whole idea, is for me to be super transparent and honest with what to expect in the markets. For someone who's been doing it for a long time, I can tell you that 2% per week or 5% per week or 10% per week, if anybody's making you those kind of promises, run as far as you can and don't look back. Because in the markets, you'd be lucky to get even 1% per week. I'm telling you from experience, because over time, everything kind of averages out. In a very strong year, yes, you can get up to like 2.5, maybe 3-4% per week in returns selling options. But in over the long term, if you want to do this consistently, especially when you consider the risk profile, because think about it, right? If you want to make 4 or 5% per week, you're definitely taking on a lot of risk compared to somebody who's targeting 0.5% per week, right? So there's different risk profiles to different kinds of traders and investors. And so for me, and I think for the broader audience, for targets for traders and investors, I think 16 to 20% is a reasonable target. I would still argue that it is a little bit more on the higher end, because as you are sizing up and as you're scaling your portfolio, I think a more realistic and achievable target's closer to 12 to 14%. And the reason I say that is because you're going to be trading very, very high quality stocks, and you'll hear me say that in this video, where I go over this many times. Only trade options on stocks that you want to own. Only trade options where you feel very confident. Don't trade shitty stocks. Don't trade stocks that have very low volumes, very low fundamentals, valuations, whatnot. Just trade high quality companies. And so when you are trading high quality stocks and ETFs, you'll quickly realize and understand that the premiums start to come down, right? Because there's not a lot of volatility, and as premiums come down, volatility comes down, your returns come down. And there's also a golden math that I like to do, right? So you can watch that in that video. You'll learn what the main target is with delta, with annualized returns, with fundamentals and technical considerations, how to pick strikes. Some of that will be discussed in this video. So I want to give you a very realistic picture. I think 16 to 20% is possible. What I was able to achieve in 2024 was about 0.5% per week, which on an annualized basis comes out to just over 26%. I'm blessed with that kind of return over the last year. 26% annualized, but this past year I did just over 32%. But if I run this strategy over and over again, it's going to be able to achieve 20 to 26%, which is way above my target. If I reduce this number down to, let's say, 0.3, you'll notice that the let me just do this very quickly. This times 4, and then this times 12. So there you go. It comes out to around just over 14%. We can also do this times 52, and that comes out to just over 15.6. That's why I mentioned like 12 to 14 to as much as 16%. It can also be a lot more realistic target for options traders, especially if you are selling, right? And so weekly average dollar gain was just under $600 in 2024, and monthly average dollar gain was just under $2,400. I was trading with about a $90,000 to $100,000 portfolio. Of course, it grew over the last year, and so now it's sitting at just over $127,000. So that's where we are after we closed out 2024, just over 126,000 actually at the moment. So 2025 performance is going to be tracked over here. I will be updating everything on our Discord and on our Patreon, and we're also keeping track of our performance like this, so you can compare it with the S&P 500, see it week after week how the performance is, and of course the cumulative net P&Ls as well. And there's a very, very strong message here, which is to say that not every single week is going to be green, and when you're trading, when you are investing, when you're growing your portfolio, it's not going to be a straight line up, but instead there is going to be some hurdles, there's going to be some bumps, and there's going to be some corrections and pullbacks along the way. But as long as you are trending upwards, as long as you're seeing that line go straight to the top right, you're doing something right. Okay, so that should be the overarching message, that it's not going to be a perfect lineup. There's going to be challenges, and we're gonna face them together. And that's why we've built this community, is to see each other's progress and help support each other, inspire each other, and share strategies, share tips, best practices, experiences, all that stuff. So if you want to get access to the 2025 portfolio updates, again, link's going to be down below. Definitely check out this free video that I've made available for everyone. You can download this PDF as well. It goes over a lot of the terminology. It goes over the considerations, risk, technical, fundamental considerations, and hopefully you find a lot of value in that. If you have any questions, please feel free to reach out. And one final note that I want to make is the concept of beta, because I don't think anybody else is doing this. That's why I really want to put it out there. And that is because a lot of people will just tell you about the returns. They'll tell you about what the returns are. That's totally fine. If you're outperforming the S&P 500, that's great. Props to you. But what is that performance on a risk-adjusted basis? That's what we're trying to calculate here on the channel, because I also don't want to take on an insane amount of risk in order to beat the S&P 500. I want to do that with less volatility. So in other words, I want to beat the S&P, but also do it with significantly less volatility. That's the real game. I mean, what's the whole point of beating the S&P when you're taking on 10 times the risk of the S&P 500? You want to do it with significantly less risks. You want to be disciplined on the risk side and very aggressive on the return side. You want to be defensive on the risk side. You want to be offensive on the return side. So I hope that makes sense. You're kind of balancing both at the same time. That's, in my opinion, more challenging to do. So link's going to be down below if you're interested in joining. As always, watch this free video with the link down below. Happy investing. I'll see you all in the next video.